Hello, happy Wednesday. Welcome to SAP Virtual Resources, where small businesses find clarity and confidence in their finances. I'm Sarah Page, a financial expert with over 25 years of corporate accounting experience and 3 years of helping entrepreneurs master the world of bookkeeping and accounting. Each week, I'll share practical tips and insights to help you navigate the complexities of financial management and drive your business forward. Join me as we unlock the keys to financial success. So, this week we are talking about vehicle tax deductions. I've covered a few tax deductions over the last few weeks. This is the last one I have on my schedule. If you have questions on certain ones, reach out, let me know what you have questions on that you would like answered. But for now, vehicle deductions. This one really has had a lot of, I'm not going to say the best advice going around on Reels, TikToks, Instagram, because I keep seeing these videos saying, buy a Land Rover and write it off for your business. Okay, let's start there and kind of break some of this down. The reason they're recommending a Land Rover is due to the weight size, because certain weight under special provision of write-offs, and I'm going to look it up so I can read it to you, has to do with something called Section 179 deduction, which allows you to speed up the amount that you can deduct. It changes frequently. I am not a tax expert, so please reach out to your tax person. But at one time, it did allow you to deduct the full purchase price in a certain year instead of just depreciating. But I don't believe that is still accurate. That is why reach out to a tax person. They'll be able to discuss a lot better. But it does allow you to write off more than you would through traditional depreciation. That I do know. Now, the weight requirement, the reason people keep saying about buying these Land Rovers is it has to be more than 6,000 pounds, but less than 14,000 pounds to qualify under Section 179. So that is where that is coming from. Why they recommend that particular one, I don't know. I am not a vehicle car person. I don't care what I drive as long as it gets me from A to B and doesn't break down. That's all I care about. So I don't have a fancy vehicle. But one of the things that they don't talk about, in my case, I have an accounting firm. If I buy a Land Rover, it is not going to be considered a business need. I don't need a Land Rover to go visit clients or go to networking events. I need a vehicle. So buying a certain level vehicle for business, it needs to make sense why that particular vehicle is perfect for your business. And this is the one that really, if it is your business vehicle and you use it on personal trips, let's say I do go buy a vehicle for my business and I stop at the grocery store. The mileage that you're using for personal use to go to your personal bank, to go to the grocery store, to go out for lunch, to do a road trip for the day, you need to track that mileage. Well, how much is business and how much is personal? And at the end of the year, you need to make that personal use of the vehicle a taxable income to the owner or whoever used it. Usually, what I'm talking about is small businesses. It's an owner might have an employee or two. So it's the owner's vehicle. And if they're using it for personal use, driving back and forth to the office, that's personal use. If your office is 10 miles from your house, that 20 miles round trip, that can't be expensed. That is personal use. It needs to be shown as a taxable income on your taxes. So, like I said, it is much more complicated than these reels show. The other thing to look at is there's different ways that you can expense it. There is the standard mileage rate, which currently right now is 67 cents per mile. It did start off at 65.5 cents per mile. I'm not exactly sure when it changed. So some part of the year was 65.5 cents and some part of the year is 67 cents. And you need to make sure you're tracking which one it is for when you use the mileage. And this goes without saying, please track your mileage. Even if you don't use the standard mileage rate as the way that you expense, you still need to keep track of your trips. What was your mileage? What was the reason for the trip to be expensed? And something that a tax friend said to me as a recommendation, have your oil changed at the beginning of the year. That way you have something concrete that you can use to show what your mileage was at the beginning of the year, what your odometer reading was, that you can build your mileage report off of for the year. So no matter how you are expensing, keep a mileage log, especially where did you go? Why did you go there? What mileage was there for that trip? So if you do the standard mileage rate, that is what you do. You do not, it includes fuel, maintenance, insurance, things like that, wrapped up into that mileage rate. Then there's the other option, which is the actual expense method. This one, you deduct the actual expenses, gas, oil changes, repairs, the insurance, registration fees, depreciation. So you have to keep all your receipts. You need to prove where those expenses came from. And the best way to do that is receipts. There's different software. I personally use QuickBooks Online for my business and for my clients. You can scan those receipts right into the app and they will save them right in there. But you need somewhere to track that. And again, you're going to be figuring out, okay, I used this vehicle for the business 80% of the time and 20% for personal. So then you will still be separating out how much was the personal expense that you cannot deduct versus the business expense. And on all of this, definitely you need to talk with your tax person. Recommend that you do this. They're going to tell you the standard mileage deduction works best for your business, or the actual. What you can't do is bounce it back and forth. So once you settle on a way to do it, you're going to be doing that going forward. So you can't say, oh, I'm doing standard mileage deduction this year because I don't have a lot of repairs. And then next year you have a lot of repairs and you go to the actual. You can't do that. You have to pick one and stay with it. So again, keep your mileage log, keep your receipts and records. I can't stress that enough because come the end of the year, if you can't prove when you used your vehicle for business, you might not be able to get what you actually are eligible for. If you don't have the records to back up, you're going to lose out on a number of things. So you want to really make sure that you keep those detailed records. And if you're using your personal vehicle for business, again, make sure you're tracking how much of that is business related mileage so that you can deduct that and get your full value. And if it's the business owned vehicle, keep track not just of the business use, but definitely keep track of that personal, because that is now a taxable benefit to the employee, the owner, whoever is making use of that. If you have any more questions, reach out to your tax person. Let's set up a time we can talk if you have questions about how to track this in your books. Best case systems to make it as easy as possible. At the very least, find an app that you can track your mileage. I know there's one through QuickBooks, but I know there's also other ones that will allow you to keep track, to let you put in why you're traveling, whether it's business or personal, and it just runs while you're driving the vehicle. So you don't have to write down the mileage at the beginning, write down the mileage at the end, or anything like that. So that could be the simplest way for you. Or you could be a straight paper person or a spreadsheet person. Find some way to track it. Because without those records, you will lose out on expenses you could have taken. So if you have questions, reach out to your tax person, set up a time we can chat. Let's make sure that you are set up so that come year end, you can walk in, you have all your records, you have an easy tax filing season, and it isn't complicated for you. So I will see you next week. Have a great week.